Start recording. All right, good morning, everybody. James here. And today's lesson, we are going to be talking about this SPX 0 DTE strategy that you guys see me doing lately here in chat. So I've had a lot of questions on it, a lot of requests to do a lesson. So that's what today's going to be about here during this this hour-long session. We're going to talk about it. You kill me. We're going to talk about it, what it is, how you profit, all that good stuff, and the different types of trades that I do on this this strategy. So you'll hear 0 DTE. What is that? That is the expiration that expires today, hence the lesson today on a Friday. So 0 DTE is your 0 days to trading. It means it expires today. So Monday, Wednesday, Friday are the days that this strategy gets put on. Okay. Let's see. What is it? Pretty much, right? The good and the bad. It's a good income strategy if you keep true to kind of your plan, your stop losses, your profit taking. You can easily make $2 grand or more a month just doing this for an hour long, 3 days a week. It's really good if you do it right. Again, it's another defined risk strategy, so you're capped at what you can make and what you can lose. It's higher risk, right? Because you're playing with no days, right? It's all or none pretty much. That's kind of how you go in with this. There's no rolling it, nothing like that. So it's a high risk trade. You're putting it on, you should be comfortable with max loss. I mean, you don't ever want to get there, but you should be comfortable with the max loss for this trade. But the positive side is it's fast gains, and depending on which one of the strategies you put on, it could be as fast as an hour or even less. But for the most part, it randomly about 2 hours plus or minus, right, of time. But you can get your fast gain. And the main reason is you're taking advantage of this fast theta decay. Those that know me, theta decays during their spreads, right? That's how I trade. Over time, theta goes out. On the day of expiration, theta is extremely fast. More so fast on the end of the day, right? When you only got a couple hours to go. So this is what you're mainly taking advantage of. You're taking advantage of that high, sometimes the high credit, but more just how fast that theta decays. So you get $500 in credit, and in an hour, it could be trading at 300 and you just made 200 bucks, right? So that's the main advantage. But the disadvantage again, if the trade goes against you, that theta also goes against you, and it's going to be a lot harder to recover. Okay. And then the high IV is not necessarily necessary. All right? Not necessarily necessary on this type of trade because you're in and out in a couple of hours. You're literally scalping it. Obviously, the higher the IVR, the better credit, right? The further out you can go. And what I mean by further out of the money strikes, right? Because you're going to get if the higher the IV, those option prices are more. So you'll get more of a credit, and being able to go further out, giving you a higher probability on that trade. So high IV is ideal, but you can do it where the SPX is right now, which is what, 4.5 IVR. That's not the greatest, and any spread trader will tell you you don't trade a credit spread on that. It's true. Normally you wouldn't, but you can still get a decent credit and take advantage of the theta decay, okay, with anything at that point. So you're just going to lower it, and it ends up getting a lower risk to reward. You're going to start seeing a lower credit and a higher risk. So the more IVR, the better. Treat it like any other spread if you can. So that's why I haven't traded it lately. The SPX has been anywhere between 1 and 5. Not a lot of credit, so I haven't been playing it lately. Kind of waiting for the pullback in the market to get the IVR back in there. All right, so that's kind of that. Now, what kind of strategies are there? The ones that I do. The first one, right, that you see me doing a lot of is the Iron Fly. This one is going to give you the most credit, but it is also going to give you the largest loss. It is also the highest risk, meaning because those that know what an Iron Fly is, that is essentially just a straddle, and you're buying wings to define the trade. So an Iron Fly or a straddle is a neutral strategy. You don't want it to move too far. So highest payout, highest risk, because if it drops too far, you got max loss already, right? So big payout. This is the one where you could be in at 9 o'clock, well, not 9 o'clock, 12 o'clock, right? And out by 1 in an hour, and the theta can kick in, and you got a good credit. But it's also one where a dip like we just saw here a couple of minutes ago, it blows you out of the water and you stop out because you're only limited to a small amount of running, okay? The next one's the Iron Condor. This one is the lower credit than the Iron Fly, but you have a much larger probability. And if you can see it on my screen, let me see. Can I do, there we go. Okay, so looking at it here, look at the Iron Fly. If you see this little green zone, this is your profit zone. Not a very big area. I mean, it's $5 up or down from the current price, okay? And that's $15, $10 wide, right? On an Iron Condor, you can see a much larger zone. You got a bigger area, so you have a higher probability. Look at it here, 80%, 45%. So it doubles in times. Yes, I am recording this, okay? So you can see your zone is much bigger, so you have a drop like today, for instance. If you planned it right, you're still within your zone. Market may pull back up and you're good to go again. But as you can also see, the credit is significantly different. I did these examples at the exact same time, so this shows you how much of a different price you can get. This Iron Fly, $730, right? But on an Iron Condor, I just kind of threw this on here at 1 standard deviation, but it's only $65. But again, it's half the price in comparison, $780, $430, right? So, but the risk to reward, you got a much better. So if it doesn't bother you, an Iron Condor is a good play. You just throw in a couple contracts, you're in and out, and you're done, okay? It's the safest bet. One of the safest bets. Next one is, these two go together, your short calls and your short put spreads. These are better. Let me talk really quick. The Iron Fly and the Iron Condor are good for, again, neutral strategies, sideways action days, where the S&Ps are just going sideways. They're not doing much. Iron Fly, Iron Condor work perfectly, okay? Now, if you have an upward market like we've been in lately, the short put spread is your bet. But again, the risk to reward, it's not the greatest, right? You're getting the lowest credit most of the time here. So you're getting very little credit to as much risk as you're putting up. However, if it's in a trending market, it might be your safest bet. You still have good probability, so it's higher chance than those Iron Flies. Okay, and one of the advantages is you can convert it into an Iron Condor, collect more credit, and you're not putting up any additional buying power. So that is the one advantage of the short call spread and the short put spread. So and you can see here 45 cents. This one was 75, but I was a little bit further at the money, and puts are a little bit more expensive right now. Okay, but you can kind of set these up into an Iron Condor, like you have all intentions of putting an Iron Condor on. You can set it up and go when the S&Ps hit highs, you go and you put your call spread on, and then as they fall and it looks like maybe you're at your low, you go put the put spread on, and now you have a much larger Iron Condor, and you probably got a bigger credit than had you just put an Iron Condor at the beginning. But it's it's a little bit harder because you got to really pay attention on how you're doing that. So that's what they are. Those are the 4 strategies that I do on this, with the most common probably being the Iron Condor and the Iron Fly. Okay, and that's it with the slideshow. So let's start here first. Any questions on what I touched on so far? Everybody good? No? Yes? No? What about butterflies? I don't typically do butterflies, Natasha, on 0 DTE, right? That's more of a directional move, and you have to be caught up in you got to be right on where it's going to fall. So let me show you what I mean by that, and I'll touch on that here. On a butterfly, right, and we'll just use today as an example because S&Ps are falling, so we do a put butterfly, right? You can do this, but it's not recommended because a butterfly is out of the money. And on a 0 DTE trade, an out of the money play on a day of expiration is going to decay. So you need a huge move down. Like you have to be ready. Like I'll put this one right here. This put butterfly, right? You're gonna pay 40 cents, so you're not even getting a credit, with a max profit of about 460. So the risk to reward is extremely high, right, or low. You're risking very little to make a lot. Problem is if you don't get this directional move almost immediately, these are just gonna start decaying. And next thing you know, they're gonna be worth 10, 15, 5 cents, and your trade doesn't work, even if the S&Ps fall. So really, you go and you put it on like this, you need the S&Ps to fall or rise, depending on which spread you have, until you're all the way kind of up here, where you have, where you're kind of got in the money at the money, so that you can sell it. So I don't really recommend butterflies on a 0 DTE. It's just not safe. You can do it as if you really think you're going to get, like maybe today, like a Friday fade. You can kind of plan it and know that you're going in with very little money. So you can do stuff like that. But I don't recommend it for 0 DTE. Okay, straddles and strangles. The Iron Condor is just like a strangle, and the Iron Fly would be just like the straddle. You're just capping your max loss. Okay, so what I mean by that is, if you have, it's quite expensive to put a straddle and a strangle on. So this would be like an Iron Fly, right? Let me get it on here. So there's your Iron Fly. You're capped 7, 8, right? You could do just a straddle. It barely raises your break-even point. So if you saw this green line here, if you watch it, it barely does anything, right? It moved a tiny bit. So why risk an infinite amount of money and a huge buying power on a straddle? Okay, same thing with a strangle. You're putting up so much more and risking so much more. Okay, and it barely raises your profit like zone. You see that? It barely changed it. So it's always safer to do defined risk on these strategies. I would not recommend going undefined. Terry, you can do it on the SPY, and I'm glad you brought that up. Okay, the reason I do it on SPX, one, the credit is significantly better, right? It's 10 times the size of SPY. Sorry, I'm watching Target. I think I'm about to get stopped out. I am. I just lost my train of thought. Sorry. You can do it on SPY, right? But it's 10 times the size. So let me just show you as an example. We're going to go ahead and do a 1 standard deviation Iron Condor. Okay. Right now, this is about $1.50. Okay. If we were to change it to SPY today, right? And you do 1 standard again, so it'd be $1 wide. This one's, you can already see there's not a lot in here. Not a lot. And you're going, just to make the same amount, you got to put in almost 10 contracts. Why not just do it on SPX? The next advantage, SPX is cash settled, meaning that if you have an Iron Condor and say you were wrong, right here, let me get back over to SPX. Say you were wrong on your Iron Condor and it just didn't work out, and now you're like this. Now you're in the money on your call side. You don't have to worry about being assigned because the SPX cash settles, meaning that this will just close for 5. That one, the put side will be expire worthless, and your credit will come out and it cash settles in your account the next morning. You're good to go. But if you did this with SPY, 2 things will happen. One of 2 things would happen. They'll close your position out if you don't have the equity in your account to be assigned those positions, if you're maybe only half in, right? Or you're gonna get an assignment fee because SPY is an index, an EFT, excuse me, not an index, and you'll be assigned shares. So there's more advantages to the SPX over it, right? Cash settlement is one of the major things. You're not worrying about assignment. Okay. Let's see. Vanden? I don't know. E-Trade, I don't think that they have a maybe they do. If anybody knows, I don't know if E-Trade has your analysis, as you can see, Tasty Trade has it, and Thinkorswim even has it, but I don't know if E-Trade has it where you can review your, the profit zone. The easiest thing to know is if you do an Iron Condor, your profit zone is in between your short strikes, whatever two you sold. Okay. Wayne, the deltas, that is all up to you, right? You want to try to make it a reasonable credit, so anything above 30 cents would be ideal. Anything lower than that, it's not really worth it to me to put on. So, typically, me, I usually always start at a 20 or 30 delta, but on this strategy, it doesn't work that way. I'll typically start at a standard deviation and just work my way up or down. Like, I don't like this. This is a little too close. Credit's really nice. So I'll drop it down and go down to maybe a 10 delta. This is still even really good. 60 cents. So you want to make yourself even better chance, maybe skew it to the downside, 50 cents. Perfect. Something like that. Okay. This is a little different on the deltas. You more work it onto what your credit is that you like. 30 to 75 cents would be an ideal amount. But deltas, I don't really pay attention to that too much on this strategy. Okay. Explain the difference from puts and calls. Mark, I'm not sure I understand your question. Tim, for butterflies, does put or call matter? Yes, a put butterfly is to the downside, whereas a call butterfly is to the upside. So if you thought the S&Ps were going to just skyrocket and make new highs today, you would do a call butterfly, right? Because you want the market to go up. And then likewise, if you thought it was going to go down to the other one. But again, butterflies I don't recommend. Okay. Do you prefer these? Do you more on Fridays? No, Nicole, I prefer them on Monday and Wednesday. Fridays tend to have that Friday fade, right? So you got to be more directional on Fridays, whereas Monday and Wednesdays, depending on how the market is, right? And lately it's been trending up, but Monday and Wednesday, there's a less chance that I've seen for that fade down or up significantly, where it just maybe slowly trends up or down. Whereas Fridays, I mean, they fall hard, or you've seen during power hour, they take off. I prefer Monday, Wednesday, but I will still do them on Fridays. Okay. On that note, while I'm remembering, I saw it in chat, I will never play an AM expiration because it settles the next day but stops trading the day before. So you can have changement overnight, and where you have a winner the end of today, if it was an AM for Monday, it won't settle till Monday, and if it gaps up or down, your trade can be now in the money and you'll lose instead. So I personally do not ever, even in my normal trading, trade these AM expirations. There's too much liability in there. Okay. Okay, Arya, I just did that for you. Oh, yeah, and the symbol varies depending on where you're at. TradeStation, E-Trade, SPX, $. There might be a .w for the weekly. Okay. Pop, 82%. That is very good, Jeff. It is being recorded, John. What time of day? Wayne, that's a good question. I've noticed I have had better luck putting them on more in the afternoon. But on that note, it can get volatile that last hour and a half, 2 hours. And as an example, I went from 100% profit at 3:58 p.m. to breaking even on that trade at 4 o'clock 2 minutes later, because that's how volatile it was. Okay. You can kind of put them on in the morning. You have a more IV, right? You're going to get a larger credit the earlier in the day you put them on. But you have all day to go. Like an Iron Condor is going to take a little bit longer to work than an Iron Fly will. if they're going neutral. For some reason I've seen that happen. If you're directional, your vertical spreads will work faster, right? Because if it drops faster in and out with your 10, 20, 30%, right? You don't go for big gains. You don't shoot for those 50, 100% gains on this strategy. You take 10, 20% and get out. Maybe jump back in again later. But you don't go for big winners. You don't go for that 100% max profit. You go for 10 or 20 or 30%. Like on an iron fly, for instance. On an iron fly, let me show you again. You put this iron fly on and you collect $670. You're not going for 100%. You can. There's a right time and a right day for that. Lately, hasn't been here. But if it's trending sideways and you're up 20%, but the market is still trending sideways, just play it with caution and know that if it drops down to 10%, you should get out. But if it's trending sideways, you can easily get 50, 60, 70%. Okay? But you have to play with caution. Iron Condor, same thing. I usually get out of Iron Condor 40 to 50% because the credit on an Iron Condor significantly different, right? So 40, 50%, you got to hold them longer. Whereas on an Iron Fly, you don't, right? You can hold it for 20% and make $100 and be done. I'm getting out of here. Okay. Vertical spreads, again, you either need that directional move, so a Friday fade, or you know, a run up or down, and you get that directional move. That'll help you get your 50% sooner. Okay. So time of day, in the morning, again, you're going to get a bigger credit, but you might hold it longer, right? Because even though you got theta working for you, it really doesn't hit hard until afternoon. All right, but you can take advantage of it. If you got in right at the market open, in a couple hours, the theta is going to drop, but you better hope it doesn't go against you. So I like to do it like my time around 11, 10, 11 o'clock. That is what? 11, 12, 1 to 2. That still gives a couple hours in the market for theta to decay. I got about an hour, hour and a half before power hour usually comes and the market goes crazy. So I got time. But if I do it too early, you know, like 7:45, 8 o'clock my time, and only an hour's gone by, a lot can happen. You know, president can sneeze and there's your trade is gone. Whereas you're waiting more towards the end of the day, you're not going to get as big enough credit, but you got a better chance at winning, if that makes sense, right? So you just got to time it and test it out, paper trade it, get the idea. Put one on in the morning, put one on in the afternoon, put one on midday. See how they trade differently, right? That's the best way I can say to do that. Do you have back tests? Have you back tested? I've not back tested them, Jeff, just from what I've done. What is the weekly end of month? The end of the month is the AM settlements. Those are your typically one of those. You don't want to do those, the ones that settle the next day. You want to do the weekly ones, which expire Monday, Wednesday, Friday, end of day. Skewing iron fly. Yeah, you could do that too, Robert. I have skewed an iron fly before. I actually just did it a couple weeks ago. So if you think, just an example, thinks SPs are going to fall, right? Well, instead of doing it here and expecting to stay where it's at, but you think it's going to fall maybe 10 points, you can skew it a little bit. And now look at this, because you're really in the money, right? Your short is really expensive. You get a much bigger credit, much smaller loss than if you were, you know, at the money. But this is a directional play. You're going to be negative, especially if it stays sideways, and then you really need it to drop so that when it drops, now you're centered, right? You see that big drop? If you put it on right now and you got 980 and then the S&Ps fell and it centered it, it's almost a $200 win right there alone, with it dropping and centering your strikes. So you can skew them. I mean, you can skew an Iron Condor too. You think that it's going to drop, so you can maybe go and at the money on the call side and put your puts down lower, right? And I feel it's going to drop. This is even cheaper than an Iron Fly, but you might only take a little bit less, right? Take 20%. But you can see the difference here. So you can skew them whatever way you think. You know, you don't like doing just call spreads because I don't want to be directional. I want to get a little bit more credit, stay somewhat semi-neutral. You can do stuff like that too, okay? Ooh, it's getting hot in here. Hold on a sec. All right. Yes, it's being recorded. This is recording. Don't worry, it'll be up there. All right. So, and you don't, it's not always SPX. I have only always traded the SPX, but what's the other one? You can do other ones, but they don't, if you wanted to, they're a little bit cheaper, right? I don't like to do them. The SPX is very expensive, so it's a lot easier to get a bigger credit. It can be done on anything, but I like the S&Ps because it's not just one equity, okay? So let's see. That's where we're at with that. Examples of the trade. Let's see. I wanted to put one on just to show you how it's going. I'm gonna have to put it on a paper trade account. S&Ps are, so let's see. I'm gonna do an Iron Condor, and we're gonna skew it, right? Because the market is looking a little weak. So we're gonna skew this a little bit. I'm gonna show you what it looks like here. 55, perfect. Oh, that's actually not skewed at all. 45, a little bit to the downside, just a hair, right? So about 50 cents. So we're gonna go ahead and put this in a paper trade account just to show you guys what it does. So this will be like a two-parter here. And I'll monitor it and then kind of show you guys. So what did I do? 315. So here's another lesson inside of a lesson. If you have toss, this is how you put it on. Open it up, go to today's expiration, which is the 0, and then I highlighted the 1520s. So here and here, and then I did 3085, 3080s. So here and here. Okay. So same thing, right? This one says 40. It's about 45. So, you know, 450 bucks. We'll go ahead and do a couple of contracts. Okay, 150. Yeah, that's about right. 40 cents. So I want to make sure they line up. 120 max profit, max loss 1380. That's okay. So go ahead and we'll put this on, and I got filled. Okay. So now we're filled on this trade here. It's easier to show you on Thinkorswim or Tasty Trade. So now, as you can see here, this is the zone that I just put in paper. Okay, that this piece can stay in, slightly skewed to the downside. Chance of making max profit. What I would like to do is probably take this off for 20 cents. So if it's trading at 20 cents here in an hour, that'll be 50% gain, and I'll take it off. Or maybe take off one contract and then another one and just kind of watch it. All right. So back over here, here is this trade. We're going to put it in a group so that we can see it. 0 DTE SPX, right? Max profit is, what did I get filled? 40 cents. So 120. I did do 3 contracts, right? Max profit 120. 120, loss is 1380, just so we can remember, right? So here we go. There's the trade, currently down. It'll bounce back and forth, okay? And what we want to do is we'll put an order in so we don't miss it, right? We're going to do an opposite order, and we want to buy it back for 20 cents for today. Now we got the order in, and then we're monitoring it here, and we're gonna let it go, okay? And that's the trade. and that's it, right? Now theta decay. Let me show you back on this other one. Okay, as long as these, and I'll leave these strikes on here so we can see and lock it here at 40. So as long as these all stay out of the money, come like afternoon, these are gonna really start decaying fast. I mean, you look, $5 strike down is already half the price. These are going to start dropping. Your puts are worth more right now, a little bit here. So these are going to start decaying fairly quick come this afternoon. And I'll bring it back up and show you guys. So that's the goal. We want to stay in this big range, and we'll be good to go. All right. So let's see. I'll check back for more questions. James, do the spreads example of AutoZone. Holly, I don't understand that question. Can you put a stop on spreads? Jeff, I don't think you can do a one cancels the other in spreads. Not in Tasty Trade, I know that for a fact. You kind of have to just set your profit and keep that mental stop in your head. Maybe put an alert on your chart, so if it falls down, you're good to go. You can't see my order. This is the paper trade I put on in toss. Okay, filled. This is filled. This is the buyback. Currently down a little bit right now. So it looks like market might be going up. Okay. It's a paper trade, Melinda. I didn't want to put it in the feed. I was just using this as an example. If you want to take it though, I'll leave it up so you can see it right here. But this is just an example to show you how it works. Okay. So yeah, Jeff, I don't know if Toss has a one cancel other for spreads, but Tasty does not. So you just got to kind of keep that mental, throw an alert. What I normally do is I'll come, so okay, 315, 3085. I will come over to Toss and I'll put the SPX up and I'll bring it up on like the 15-minute chart frame, and then I map out my trade. Okay, 30, 31.15. I'm just gonna put it up here, up here. So I put my short strikes on my chart so I know what zone I have to work with when I'm monitoring it. So this is how I do my stops. Okay, so there's my zone. This is the profit zone. We're skewed to the downside. You can see that. What I do is I come in here and I create an alert to the upside, and I create an alert. These are my stops, right? Create it to the downside. So if we're getting close to my short strike, I got that alert, and then if we're getting close to that short strike, I got that alert. So there's your kind of your stops, right? And then I just watch it. As long as it doesn't hit these, I don't freak out. I let it go, because max profit is in between these ones that are even further away. So that's how I kind of handle it, and I just let it go and I go on my day. I usually got that 50% order in or the 20% order in. Now what I also kind of do, like, and I do it more for iron flies unless I put a whole bunch of contracts in on an Iron Condor. And the reason why I say for iron flies is because I can't show you now. Well, let's say I can. We have those written down. An iron fly, right, has a much smaller range here and a way bigger loss, and I don't ever like to get max loss. So what I do is I figure out what my credit was, so 630, and then I times it by 25% of the credit and by 35. So if it's trading at 25% of the credit received, I start to really watch the trade. If it hits 35% of the credit received, I get out, but that's only on an iron fly because it's the more expensive one. So in this case, where's my Excel sheet? I'll show you. 640, right? So just say you got 640. What I normally do on these iron flies is I figure it out. 1.25. If it trades at $8, right? I mean, it's going against me, and the iron fly is at $8. I now need to watch it because I don't want to lose too much more. Then, if the iron fly hits 35%, I'm looking to get out because I don't want to lose too much more. Okay, so that's what I do, but that's only for the iron fly. The Iron Condor is typically only 1 or 2 contracts, and I'm okay with those max losses because they're not as big. All right. What's the max size on an Iron Condor? What one did I put on here? Oh no, I need to look at something. I want to make sure where I got this right. 15, 20, 80, 85. Okay. 15, 20. What do you mean what's the max size now on an Iron Condor? Like what I'm comfortable going in, I'll go in about, depending on the credits, right? If I get a lower end of the credit, like 35, 40 cents, I'll probably go 3 contracts. right? Because you can see 3 contracts gives $1.35. I typically try to get 50% or more on Iron Condors, so since the credit is extremely low, I'll put a little bit of more contracts in. They typically match what the Iron Fly is. But if I get a higher credit, you know, say you got closer to 70, I'll go a little bit less, 2 contracts, maybe even 1. If I'm scalping it, I'll do 1 contract. Okay. I think we got in a 40. We did. Okay. All right. Let's see. Oscar, in what scenarios do I use an Iron Fly? Would be trending sideways, right? Because an Iron Fly is a neutral strategy. And it's a less of a profit zone than an Iron Condor. So it's really got to be trending sideways. You see up here, this right here, this is what why did it zoom in and not create my, sorry. 1 click. If it's trading like that, that's perfect for an Iron Fly, right? It's trending right along, staying neutral, maybe rallies up, but comes right back down. Okay. If it's trending like this, how it is right now, way down like that, this is more of a setup for an Iron Condor because it's a much larger range that's bouncing back and forth, but still somewhat sideways. Okay. But if we have a big drop, you know, you can kind of see how it's trending down like this, right? If it's trending like that, better scenario would be a call spread because it's just trending down, right? But so sideways action, extremely sideways action, Iron Fly, sideways action, Iron Condor, 100% range bound one way or the other would be a call spread or a put spread. Okay. All right. Unless I'm missing anything, that is really it, you guys. If anyone's got any more questions on how this works, how it plays out, anything, we already got a sample trade on, and you can see here now, you know, the market, since we put it on, the S&Ps have kind of gone up a little bit, but you see we're even, and that is just because of those out of the money ones are decaying. So even though S&Ps are trying to come back up from its low, we're now even, whereas just 5 minutes ago we were negative 20%. So this is perfect for you know, that little range bound. The theta kicks in. Now we're down 12% because it's going up again, but over time, in an hour or even less, as the market goes up, if it stays in that range, we'll be okay. All right. Yeah, absolutely. Iron Fly as well. Let's see where we're going to center this at. We're going to recenter it only because I feel like it may pull back up to at least this moving average. So look at it here, 3105. So where it's currently at right now actually looks okay. Let me just double check this chart. The iron 3105. Yeah, maybe 30. Yeah, guys. This is the one thing about, there's a big gap. So we'll do 3105 Iron Fly. All right. So that would look like this. And then I try to at least make sure I have some distance in it. All right. So 630. So then a sample of that would be coming over here. We want to, all products. We want to get back to, oh no, I'm on the wrong one. This is my normal account. Here we go. So trade. Okay. Oh, and then let me see. Hold on. It's going to mess it up. It is. I can't. I mean, I can. I can put it really wide. Let me see. Because it's going to mess up with this position. 3110. Is it? How's it looking? Where's 3110? That's too high up. I'm just trying to think. Because it's going to mess up the play here. Actually, because I'm already short. So if I short it again, I'd end up buying it and it ended up closing it. So I can't, unless I went really wide, and I don't think I want to go really wide. I got to get over to 31.25. Let me see. 31.05s are safe, and then 31.25 is open. What's our other strike? 30.85. I see. I can't. No, I can't put it on because it's going to mess up the Iron Condor. It'll end up closing the short strike because I got to put the long strike on. Unless I skew it. No, I don't want to do that either. It's not an equal amount. All right, we'll skew it for example purposes here. Okay, so there's the straddle, and then we're gonna go buy that one, and I have to buy this one. All right, so this will give me 640, 635, close enough. So we're gonna put this on. Oh, thank you. There we go. I forgot about that. All right, perfect. So now we can make it what I want. So there, sell, sell, and then 30.90 and 31.20. All right, so the credit 610 on paper, we're 620, send, filled. Okay. So now we'll get back over to the monitor tab. We're going to put this into a group, and this is going to be the 0 DTE iron fly, and we have, how much did I get filled? 625. Okay, so we have 625 and a 875 loss. Okay. All right, so I'll show you how these two vary from each other. And now I should be able to view all accounts. There we go. All right. So now we'll be able to see how these both work. And then if I bring you over to the chart to show here, okay, you can see the differences. See how this is a much different profit area, whereas the Iron Condor it was like green from here, like that. So your zone is a lot smaller in an iron fly, but a lot bigger profit. Okay, so this is the zone. So what I usually do here on an iron fly, since your short strikes share, you can't put your alerts there. What I do is I look at the break even, and then I map that out on the chart. So we have like roughly, we'll go, there we go. All right, 30, so it looks like 98.71. So we're gonna put one here, 98.71. 3098.71. I'm gonna color coordinate these so we know. And then the other one was what? 30, 26, 25, 22. There it is. We'll say 21, 11, 21. All right. 3111, 21. 3111, 20, 21. Okay. All right. So now if I bring you over here, this is our break evens. These blue lines are the break evens. Max profit is going to be, I have so many lines on this chart. Max profit is 3105 on the iron fly. And we're gonna make that green so we can see. So there's a lot of things on here now, guys. But if you just look here, these blue ones, this is the break evens on the iron fly. So as you see, it's a big difference. Here's your break even down here, and way up here on the Iron Condor. Or I mean, this is not even break even. This is max profit. Break even's even further back. And your max profit on this iron fly is down now, right? It's either here or, okay. So now what I would have done is I would have put alerts in somewhere around like that, and then one right here. This is how I would treat my stops, okay? So now, but that's where we're looking. I know it's a little confusing now. And you can see that the iron fly is already profitable. and the Iron Condor is still negative. Okay, and that's just because you're wider out on those wings. Okay. James, is the iron fly the same as a butterfly? Yes and no. Okay, on an iron fly, Oscar, you're getting a credit. So here on iron fly, you're getting a credit. They somewhat look similar on the P&L chart, right? You need to pin that short strike for your max profit, much like on a butterfly. You know, a butterfly, it's the same exact P&L, right? The same exact, the P&L, right? So your profit zone is exactly the same. You need to be in this zone, but the difference is when you do it, you're actually paying for a debit up front to reach a possible max profit of a higher amount. Okay, so it's more directionally ran. So you need it to run up or down depending on what you put on. Whereas on an iron fly, you want it to stay in one spot. You're getting the credit up front and you're taking advantage of the decay. If you put on a butterfly and pay that debit, you're fighting decay, right? Decay is hurting you instead of helping you. Okay, so that's the difference on those butterflies, and I do not recommend a butterfly on a 0 DTE. What I do on butterflies, that's a whole nother lesson. I put them on the day before expiration, but that's a different lesson. Okay, so on the Condor, are you leaving? Okay. On Iron Condor, if you are in profit, do you? Good question, Joshua. So we'll get it back up here. Just trying to throw you. What one are we in? We have the. Let me make sure we got the right one. 1520 calls and the 8085s. All right. So if you're in this zone, you do not have to close it out. Okay, you can leave it on, but it's risky. Again, the last hour of the day, depending on where you might be trading, like if you're still centered and it was trading at 3100 and it's, you know, 3 o'clock, you could risk it, right? You're probably already up 80% if it's still centered in your Iron Condor. Why burn a day trade? Or why burn a day trade? Leave it on, let it expire, right? That's your one reward, or your, you know, your argument. But also, why risk power hour where it could now boink, shoot way up here and you take a max loss just to save a day trade? So you have to weigh those in, okay? So you'll burn a day trade when you enter and exit in the same day on an Iron Fly, the Iron Condor, the vertical spreads, all that stuff, okay? If you let it expire, you don't burn a day trade, you saved your day trade, but there's a lot of more risk. You see where we are, this current Iron Condor, we're kind of, the SPs are heading back up. So we're getting closer to those calls. I wouldn't recommend, even though it's still technically in zone for 100% profit, I wouldn't recommend in holding that, because if you're up that high, power hour comes, and instead of fading like you may be hoping, it keeps going. Now it might close over here and now you get max loss. So if I like 50%, right? Even on these trades, unless you know, you're not even going to know, but unless it's trading like centered on your Iron Fly or on your Iron Condor, it is not recommended to hold it. Okay. Just take your money and run. If you want to do it, re-enter, you know what I mean? Re-enter and recenter it. Like if it's right here like this, and just say it was now trading at 25, take the 45% profit, close the trade, and if you wanted to get back in it for the last hour, recenter it so that it's trading back down here and you have a better chance, okay? Why would someone buy your trade? People do, Jerry. You need a margin account. Correct. You need spreads, you need a margin account. You got to be approved to trade spreads, which I think is level 3 because these are all undefined risk. And you're either going to burn your day trade. Yeah, let's see. If you don't have 25K, then this is why this strategy works. Monday, Wednesday, Friday. If you don't day trade anything else in your margin account, you can literally day trade, and then come Monday, your trade's available again. Or if you have 25K, and it doesn't matter. So this is good for people who don't have 25K and you don't day trade anything else. Okay. But that's it, guys. I'm pretty much set on this lesson. If anyone's got any other questions, I'm going to stop the video. I want to show you where we are since we put this trade on. Okay. We did 2 trades. Let's see. The first trade went on about 25 minutes ago, the Iron Condor. Okay, the Iron Condor is still even right now. And here's the thing, you see how the market went up from when we put this on, and we're still even. So that gives you an idea on how that theta decay works. The market has rallied upwards against our downward skewed Iron Condor, but because of the theta decay, we're even, and actually now we are up because theta is falling in this trade. Okay. The Iron Fly, on the other hand, that one was up almost immediately, and in 10 minutes we are already up 6%, $37, $40 now. So this shows you how fast of a trade this can be. Iron Condor a little bit slower, but look at this. These are starting to decay. 18%. Well, you know what? The market, it looks like it's falling back down. That's going to go take it off at 30%, recenter it. Okay. This Iron Fly, 7% is $45. I like to get $100 to $200 a day on these type of trades. So the Iron Fly, our max profit's 120. The Iron Condor, I'm gonna like to hold this all day because the credit was under, my average 150, 165 credit that profit that I like to get. But I would take it off and recenter it if I needed to. And now the market's kind of coming back down, so we're good. I'll take it off at 50% and be happy with it. The Iron Fly, we only need 14 to 18%, and I'll be happy at taking it off because it moves a lot faster. It's a much bigger profit. 12%, $15, 6%, $40. So that shows you how the profit works. But again, higher risk on this Iron Fly than on this one. Okay. What is your thought? Nick, I don't do calendars, so I can't even answer that question for you. Okay. And I think that's it. So I'm going to stop the recording, and I'll keep checking on this, our paper trades here. I'll throw the recording back on and retouch basis. That way, hopefully I can get them to combine the video so it's one video. That way you guys can see how it plays out throughout the day. So at 9, here's our review. My big fat head's in the way. You can't see it. So there's the Iron Fly, right? It's up $40. And then the Iron Condor is only up $7.50. Okay? So we'll come back and I'll watch it. And if I see it up something significantly or something, or the market changes, I'll come back on. We'll do another recording and we'll talk about it. So like today is going to be like a 2 or 3 video recording day. But on that note, this is where we're at, guys. It is recorded, and I will come back on it and do another recording if the market changes, profit gets higher up, and I'll show you guys how it goes. All right, so let me go ahead and stop this recording. All right, good afternoon, everybody. James here, and this is part 2 to the SPX session. Excuse me. I just wanted to quickly touch bases here just to give you an update on where the paper trading is, what the account value is, that sort of thing. So here's what the S&Ps have done since we got in, and when we originally did it, we were in about here. Okay, and as you guys can see, the S&Ps have ran up. Now we're getting close to break even on the Iron Fly, but we are still significantly away from the Iron Condor. So what that looks like, you can see here. So the first trade we did was the Iron Condor, and look where we are at. We are still breaking even. Okay, and this is partially because The S&Ps are continuing to rise, so it's getting closer to our calls, our short strike on the call side, but the theta is kicking in, so it's kind of countering the the way it's going against us, but the theta is falling, so it's eating up the current losing that it's going, if that makes sense. It's riding up towards our call strikes, so we should be getting negative, but the theta is decaying, so it's kind of holding it back here. And so we're kind of breaking even. Here you go. Now it changed a little bit. We're down a little bit because S&Ps are rising, but it's not nearly that bad. Okay. Now on the other hand, our iron fly is now negative. Okay. And it's still negative, and that is because we're getting closer to the break-even point. So that's going to be more negative than the Iron Condor that we're still, while it's going up against our downward skewed Iron Condor, we're still quite a ways away from that being tested. So that shows you kind of where we're at. We were in about an hour and a half, almost 2 hours into these trades, and we're okay. Neither of them have a significant a loss involved. So I'm not worried. If I was live, I would be more worried about the Iron Fly, because the Iron Fly is more being tested here than the Iron Condor is. But both are significantly low on the loss right now, nowhere near being stopped out. So that's just to give you an update where we currently stand about 2 hours after the trade. And I will make another recording here when we get closer towards the end of the day. All right, so take care, everybody. Thank you. All right, good evening, everybody. And James back here for our SPX training. This is the third and final video. I plan to get them all combined into one, so you won't even know. But wanted to touch bases where we stand with the Iron Condor and with the Iron Fly. And on a good part, they both actually are working. So, I mean, as you can see, S&Ps are pretty much where they opened, so they've been sideways today. All right. Come over here, take a look at it, and our Iron Condor is sitting at 56%, so we are good to go. We are ready to take that one off. Our Iron Fly, the pullback helped out. We're sitting over $100, so for essence of this video, I'm just going to end up taking it off. So just want to show you guys here again. Zoom out. Here is our Iron Condor, and we are slightly to the high side. Right? We're getting close to those calls, but it still worked out. Theta has been decreasing just as fast as the S&Ps were moving up, so we're good. And then here, this little area is the Iron Fly, and we were getting close to being tested on those calls, but it's starting to pull back right back towards the 3105, which is where we want. So that being said, you can see here we're doing fairly well. We're over now. We're $75. We're at 62.5%. The Iron Fly is bouncing right around $100, 75, 85. So we're doing pretty good. So I'm gonna go ahead and take these off because we hit, at least hit the goal on the Iron Condor. And just for the video, so I don't have too many videos going on, I'm gonna get out of the Iron Fly. So that being said, we're done. We hit our goal. So this Iron Condor, we're gonna go ahead and take it off. Okay, and I'm just going to buy them back at mid price, which right now is about 20 cents. So let's see. We get filled in here in a second. Still working on that one, so that's good. And then this Iron Fly, it's bouncing around. Did I close the wrong one? Oh, there we go. $75. So I'm just going to take this one off too, just because of where we're at, like I said, with the video. So I'm gonna go ahead and close this one out. And remember, they're just like any other spread, so you're gonna buy them back for a debit at the lower price. So mid price $5.50, 75 bucks roughly, sounds good to me. Do $5.50 and we'll go ahead and send that out. So now we'll just keep a watch on it, on all of these here. So, and we'll just see when they fill. Hopefully they fill here shortly, so it can be done. $5, 540, and we're actually lower here, showing 18 cents. So we're doing pretty good. Worked out perfectly for this lesson. So I'm actually kind of happy that worked out. So while we're waiting for that to fill, anyone got any last questions that maybe they came up with since the last video? You guys all good? Got a basic understanding? And yes, Arb, I'm still in Target. No, but thanks, Christy. Okay. Awesome. All right. Make sure you show what you wanted on Tasty. Make sure you show what you wanted to show on Tasty. Ben? I'm not sure. Not every day, Ricardo. I mean, well, I've seen people do it, right? These strategies are Monday, Wednesday, Friday, because that's the expiration days. So, but you could put them on a Tuesday and a Thursday for a 1 DTE, and I've seen people profit on them. I have not personally done that, but you can do that. Okay, you absolutely can do that. You have a little bit of risk because if it gaps up or down after hours, you know, you're not centered anymore where you'd want to be. All right, and I am out of, it looks like the Iron Fly. So I think it was sitting about 15%. We got out of the Iron Fly at 550. We got in for 670, 625. So this trade we made 75 bucks. Not a lot. Could definitely have made a lot more, but I just needed to get out of the trade, okay? And then we're still waiting for the regular Iron Condor to fill. All right. Okay, I see what you mean, Ben. Give me a second. So let's see. Mark, yeah, the mid price is typically the good starting spot. If you're okay with maybe a little less than 50%, you could always, you know, buy back for slightly higher than the mid price. But I always start at mid price. For me, that's my preference, and half the time I get filled, and sometimes you gotta wait. For all I know, we could have been filled on this. This is just a paper account, and it's taking a little while here. But we'll see if it go aheads and fills here shortly. Okay. And if you buy back your SPX, it is a day trade. That is correct, Craig. So the Iron Fly was a day trade. Doesn't matter, 4 contracts. It all treated as one trade. So it's 1 day trade. If you left it alone, the Iron Fly, I recommend not leaving it alone, but you technically can because it's cash settled. But you could leave it alone, let it expire out of the money, like this Iron Condor right here will probably expire out of the money unless we get a more of a run up than down because we're closer to the high side here. But most likely will expire out of the money, then wouldn't burn a day trade. So yes, you can. Okay. The curve analysis, yeah, I'll get to that here, Ben. Give me a second, Christy. I just want this to close so I can stop the video. And it looks like it might not right away. So I'm just going to go ahead and get it off. You guys saw it was at 50%. And these took what? 8:35 and we're at 11. So 12, 1, 9, 10, 11. 3 hours for the Iron Condor. And it looks like 2.5 for the Iron Fly. So not too bad. Okay. I'm just going to go ahead and up this just to get out for the video. Let's see. Maybe it'll fill, maybe it won't. Okay. But yeah, so they don't take that long, right? And today's sideways action was a perfect day for an Iron Fly or an Iron Condor. And they're like 2-hour-long trades if you do it right. Okay. So it's a good little strategy. I'm going to go ahead and stop the video. We all saw it hit 50%. And we're good to go. Okay. So today's session, pretty good.